Lithium and next-gen fuels are powering this next leg up for the semiconductor industry. Everything from chip fabs to data centers to mobile chips that are now in our cars. All of these things take a ton of power. So lithium, in our view, is an important part of the semiconductor supply chain.
So I would really like to encourage, once again, entrepreneurs to enter the lithium refining business. You can't lose. It's a license to print money.
Welcome back, everyone. For round 2 of our energy episode, we're going to be talking about Tesla and Livent today on our show. But first, we're going to take a small, short trip down memory lane. Now, some of you viewers that have been here a while maybe already know, but Nick was obsessed with Tesla, the product, when it was still a privately held startup. And so we were shareholders for a couple years right after the IPO in 2010. We more than doubled our money in about a year and a half or so. But at that time, we had just bought our first home, which was a condo in Arizona. And money was very tight. So paired with that, there was a lot of negativity about Tesla at that time. So without a lot of due diligence and without any of my input whatsoever, because I knew nothing about investments at that time, didn't even think about it at all, we sold that small profit that we made in Tesla and took the cash off the table. Now, you all know that the return on investment in Tesla since then was incredible. And it's definitely much more than that condo that we have since sold. And I haven't even thought about that condo or this story in many years. Nick, what's the point of this story?
Casey, I knew even less then, 10 to 12 years ago than I do now, but that's okay. I think that's a good baseline assumption. None of us really know anything in the grand scheme of things. The point is, though, your biggest challenge as an investor likely isn't stock picking. Okay. Stock picking is super sexy. That's what gets all the attention. That's what gets all the clicks, including here on our YouTube channel. But really, in our personal experience, as well as our experience in managing actual client portfolios, is that the biggest challenge is nearly all investors have to fight this tendency to sell low and buy high, the exact opposite of what you're supposed to do. And then paired with that, once you buy low, maybe not selling high, but just holding indefinitely if you have quality business that has the potential of compounding growth for many years. So you're going to need to learn to sit tight for many years, sit on your hands for many years. Don't touch your stocks, including through some absolutely hellacious periods like we've been going through for going on year 3 now. Okay, we have a small position in Tesla again, Casey, right? We picked it up again a few years back. So what's all this business with lithium and a license to print money?
Great question, Nick. And we'll just do a little background on this for the lithium market. Lithium and next-gen fuels are powering this next leg up for the semiconductor industry. Everything from chip fabs to data centers to mobile chips that are now in our cars. All of these things take a ton of power. So lithium, in our view, is an important part of the semiconductor supply chain. Our chip stock investor energy edition videos don't get a ton of views. So if you're not up to speed, if you haven't watched those videos, you should definitely check some of those videos out. We have several videos on energy and power stocks that give you some more information and background on this subject.
Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support, as subscribing to the channel helps us continue putting out content like this. Right. Okay. Let's rewind here for a moment to July 2022, Tesla's Q2 2022 earnings call. Musk was talking a lot about inflation at the time. Analysts had lots of questions about inflation. Some basic materials were just starting to decline in price again. Lithium, not so much. It was going to continue rising through the autumn of 2022, this time last year. But this is the quote. Musk talked a lot about commodity prices starting to come down, but he talks about lithium in particular. So lithium is actually very common, but you have to refine the lithium into battery grade lithium carbonate and lithium hydroxide, which has to be extremely high purity. So it's basically like minting money right now. There's like software margins in lithium processing right now. So I would really like to encourage, once again, entrepreneurs to enter the lithium refining business. You can't lose. It's a license to print money. Okay, that's the quote from Casey's favorite CEO, Elon Musk. A few months later, Tesla announced it would be continuing its trend of vertical integration. So, as you probably know, if you own Tesla and are a Tesla fan, it owns and develops a lot of its own tech, all the way to manufacturing of that tech in the form of a car, and then also final distribution to the consumer, as well as some other things like the charging station business. And it said it was going to continue this trend of vertical integration by building its own lithium refinery in Texas. Then in May 2023, Tesla actually broke ground on construction of this facility outside of Corpus Christi, Texas, on the Gulf Coast. Casey, here's the latest from the rumor mill. It's that Tesla has actually moved up the timeline to opening and ramping up production in this facility. They're now targeting production, it sounds like, the second half of 2024. So this time, again, next year in 2024, versus the timeline before was early in 2025. The question, Casey, is refining lithium still a license to print money, like Musk said? Because as we talked about in the last video, lithium prices have come down dramatically in the last year. So is it really still a license to print money, or is this just bluster from the media picking up on some clickbaity material Musk said over a year ago on an earnings call?
Now, Nick, as we've talked about, this is not Tesla's first entrance into the lithium market. They have acquired assets in the past, including rights to lithium mining in the Nevada desert. As of yet, this refinery is the first actual attempt to get into that business itself. Since Musk said this license to print money, quote, lithium prices, as you mentioned, have come tumbling down, as you can see from this chart. Why bother constructing this facility at all? Why go into this business? It's going to cost quite a bit to fund this little project, around $365 million. To operate on an ongoing basis is unknown, but even Elon Musk said that refining is a tough nut to crack. And once production is ramped up, this will only supply enough lithium for about 1 million cars per year in North America, so a very small fraction. But here's why we believe that Tesla is going after refining right now. As we discussed in the last video, lithium mining is among the most cyclical of the cyclical businesses and industries. Here's what that means for one of the raw lithium producers, Albemarle, which itself is trying to expand into refining and become more fully integrated. Operating profits soar in the good times, over 40% operating margins at points last year. But now that figure is temporarily in the negative territory. Nick, do you want to compare that to the other company that we're considering today, Livent?
Yeah, Casey, yes, let's compare that to Livent, or at the moment, it's called Livent, ticker symbol LTHM. Again, admittedly, this company is actually also trying to more fully integrate via that pending merger with Allchem. Again, a chart here from our friends at Main Street Data, link to your own subscription to their data viz in the description below. But you can see here, even in tougher times, Livent, which focuses on refining, you can see the operating margins are still incredibly high in the third quarter of 2023. Still well over 40% in the last quarter, 44%. Compare that to Albemarle, which is more stilted towards the mining and extraction of lithium, which has gone negative. A license to print money in lithium refining? Yeah, it certainly looks like it, right? Maybe we should do a brief detour here, though, and talk about Livent's last quarter and the fourth quarter 2023 outlook. Because, Casey, we do own both of these stocks. Livent, we took a position in just a few months ago to complement our position in Albemarle, which we took coming up on 2 years ago at this point. So link here to our last video on Livent from a few months ago. We did a deepish dive on the company and the lithium industry. Maybe just here before, Casey, you go over the numbers. Once the merger with Allchem is finished, Livent will actually become Arcadium, ticker symbol ALTM, Alt M. Once that merger is complete, sometime by the end of 2023. So within the next month to month and a half. Casey, what happened during the third quarter of 2023?
Let's do a brief summary here of the financial results for Livent for Q3 2023. Revenue, $211 million, down 9% year over year. GAAP net income, $87 million, up 13%. Adjusted EBITDA, $120 million, up 8% year over year. GAAP earnings per share at 42 cents. On an adjusted basis, earnings per share 44 cents, both of those up in the positive territory. And let's also briefly just talk about the full year guidance for 2023 for Livent. Their revenue is expected to be between $890 million to $940 million, which would be a bit of a drop in their previous annual guidance, which was $1.025 billion to $1.125 billion. But now that new full year guidance would represent a 13% year over year growth from the 2022 midpoint. On an adjusted basis, their EBITDA, they expect between $500 to $530 million, which would be up 40% year over year from 2022. We talked about this with our recent video about Albemarle, so we don't necessarily need to rehash all of this, but I'll just briefly point out this slide from Livent because they succinctly pointed out what exactly is driving these market conditions. Recent lithium market price was weakness driven primarily by supply chain destocking, particularly at battery cell level in China. Underlying growth and energy storage installations consistent with their expectations. The customers obviously still focused on securing those long-term lithium supplies. And as those supply destocking ends, they expect a rapid return to growth in the lithium market. So as a result of that, Livent expects that higher volumes will lead to that additional cash flow generation as more capacity comes online with their new merger with Allchem at the end of the year.
So in the meantime, Casey, the big takeaway I think here, again, is lithium refining, highly profitable, even in less than ideal business conditions for a company like Livent, a small company at that. Good stuff. That we like the merger with Allchem to become this new business that'll now be known as, from here on out, when we do subsequent videos, Arcadium, ticker symbol ALTM. So I think this begs the question now, Casey, what is Musk's angle here? Does he really want to compete with a company like Livent / Arcadium and print money from lithium refining? I don't think it's that simple. I don't think they're going to take the advice to print money with a lithium refinery. I think this seems to be a slight pivot from Tesla's accelerate the world's move to renewable energy, which in large part it has already successfully accomplished. And now it's making this pivot to just making a great car even more affordable. So they've begun work on that already. And they showed this off in the Q3 2023 earnings slide deck. They talked about that reduction, that year over year reduction in car production costs by nearly $2,000 from the same time last year. And this is why Musk led off the Q3 2023 earnings call talking about vehicle costs, this new obsession with getting production costs down even further in 2024, because the global consumer is under pressure from higher interest rates. And so now they have even more incentive to try to get cars more affordable. And the goal, I think this quote in the Q&A session of the call was very telling. So Musk says, so it's really just the vast regard of people and how much money do they have to pay immediately and how much per month for a car. That's it. You can stop right there. And our car is still much more expensive than a RAV4 when you look at it that way. Now, their new CFO, Vaibhav Taneja, interjected one other thing, which I'll add. When you look at car buying in general, we're trying to get to the next set of EV adopters. And Musk says, not an EV adopter, just anyone who wants a great car. So what does Musk really want with this lithium refining business?
Well, when you look at it like this, it's to take that operating margin away from some of the suppliers and then reduce the cost to produce an EV. And this is important because even after years of development, batteries are still one of the most, or if not the most expensive part of the EV, anywhere from over $5,000 to $20,000 per vehicle part of the cost. So this was really well illustrated in a visual from Visual Capitalist in their elements section, which we'll show you here. This article is by the author Bruno Venditti, and the design is from Sabrina Lamb. Awesome, awesome visual that really captures the cost of the battery in an EV.
Yeah, absolutely. Awesome. Awesome chart. We love Visual Capitalist. So to round out this discussion, Casey, late last year and early this year on Twitter/X, we highlighted the price war that was only just beginning to become apparent in the EV space between Tesla and all the other automakers with these EV ambitions and aspirations. And we said Tesla was uniquely positioned to keep winning in the long term. Obviously not winning market share because of course their market share is going to decrease as more EV production comes online from competitors, but just winning the growth and profit margin game. And the Lithium Refinery, I think, just illustrates this fact. Tesla has very deep pockets as far as cash goes, and deep pockets as far as tech know-how goes, and the ability to vertically integrate. This company is the real deal as far as this goes. It's in a lot of ways the Apple of the auto industry now, with that ability to vertically integrate across multiple lines of its business. So this lithium refining operation, it's just the latest proof. We think this also has a bit to do with India announcing some new easing of import tariffs on cars just recently. We talked about this over the summer, Casey. Musk had some conversations with India's prime minister about this, and we think this could pave the way for Tesla entering that market, that very large and growing market, in a very big way in the coming years. If they can continuously drive down the cost of production, especially of those batteries via lithium refining, we wouldn't be surprised to see Tesla test this out in that quadrant of the world as well. Maybe opening up some lithium refining, perhaps in China, maybe in India, or some market over there to continue to increase the purchase of its vehicles in new markets.
So in summary, I think we can say that Tesla stock is still very much part of our portfolio, but it's a nibble for us at this level. We do really like companies like Livent, which will soon merge with Allchem and become Arcadium, because they will be supplying everyone else as they try to compete with Tesla. That's a wrap for this energy episode, but make sure you stay tuned, subscribe, and make sure notifications are enabled. We have much more coming your way. We're going to have another video this week talking about NVIDIA, and we're going to answer the question, will AMD and Intel catch up to NVIDIA after NVIDIA's new H200 release news? Of course, one of our favorite companies, Applied Materials, is reporting soon. So next week, we will have an update on them as well. Take care, everyone, and hope you have a great rest of your day. See you soon at Chip Stock Investor.